Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, this has been another interesting week where the Dow Jones Industrial Average had gone up in the beginning of the week, just like I said it would. Here's my lines again as evidence for all of you who are following along. Last Friday was right here. I said that we would most likely move up during the first part of the week and then start to pull back, which is exactly what's happened here. So what does that mean for the week ahead? Well, you can see there's a couple of mixed signals. We have almost a bearish engulfing pattern right here from Thursday with a doji on Friday, right here, the 22nd. And we still have a minor gap below the market here and a more significant gap right here. Now here's the challenge. The doji usually means a pivot point is about to form, but if you look at this red candle from yesterday, you can see that the red candle volume, I'll zoom in a little bit more for you, the red candle volume is starting to increase. So that tells us that the sellers are starting to move in. So I'm going to leave this line in place for the Dow, and I believe that the market is going to pull back a little bit more towards this moving average in an attempt to fill the gap. So again, we were correct in the forecast for the Dow, leaving that line in place for next week. Now, if we look at the spiders, ticker symbol SPY, it's the S&P 500 ETF. Again, very similar pattern where I said on Friday right here, this is Friday, I said we would most likely move up to fill that gap, which it did, and then I said we would most likely pull back later in the week, which we did as well. So here we are with another pullback towards the moving average. I'm going to leave that in place for the spiders because I think that we're going to pull back to that moving average and possibly bounce off of that moving average. So I'm going to leave that in place. So everything is in line with what we forecasted. That gap is still going to act as a price magnet, so we have to keep an eye on that and move forward with good risk management principle. Now, if we look at the Russell 2000, which is a more broad-based index, again, just like I said we would move up to test this resistance line right here. I drew that line as resistance from these highs. Again, Friday was right here. I said that we would move up. That's exactly where we went. And now we're at that resistance point. Now, the interesting thing for the Russell 2000, let me adjust this, is that unlike the diamonds, where we have a bearish engulfing pattern, this actually has a bullish engulfing pattern for the Russell 2000. So although we hit our targets this week for the Russell, I'm going to suggest that we could actually break out of this resistance point right here. So I'm going to extend this a little bit further and over that line because I think we could move over that resistance, and we'll see what happens because we have a bullish engulfing pattern on Wednesday. We had another bullish engulfing pattern on Friday, and when you have a bullish engulfing pattern right at resistance, it usually means a breakout. So we have conflicting signals around the markets, with the Dow looking more bearish than the Russell 2000, but that's how it happens sometimes. Not all markets move in line with each other, and we'll see how this one plays out. Now with the Qs, that's the Nasdaq market, also known as the power shares. We did move up a little bit and we pulled back like I thought we would. We didn't go to a new high, but again, the Qs are very interesting because this is showing more of a bullish pattern here. I'll erase these lines here for you right there. And the Qs are more in line with what the Russell is suggesting with a more bullish indication. So this is a roll reversal support level right there for the Qs. I think we could go just a little bit lower and then bounce off of that back to the moving average. So I think the Qs are going to remain in a tight trading range coming into the weeks ahead, and we'll keep an eye on that. Now finally, the VIX. I did not have a lot of time the week before last to forecast the VIX, but we did last week. And the VIX played out exactly like I thought it would. I said that we would most likely pull back. Again, here's my line right there. See that faint red line? I said we would pull back and then bounce off of the support level, and we're in the process of bouncing. So we have a long stretch of red here. That's a stale red light, and I'm going to leave this in place for the VIX because I think the VIX is going to start to rally. So again, mixed signals across the board, but that means when you have mixed signals like that, it means to be more defensive. If you don't have all the markets lining up in a row, pointing in the same direction, many times means confusion among the investors that are participating in the market, and that means to play it more defensively. So keep an eye on the VIX because that's always been the best leading indicator for us, and there's still a gap above the market right here. That gap will fill, most definitely, that gap will fill, and as the VIX moves up to fill that gap, the S&P will start to go down. Have a great weekend with your families and friends. Hopefully we're not having any hurricanes this weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.